Okay. Okay, well, welcome everybody. Unconventional Wisdom, the CSE Investment Podcast Show. And we're here, got a Thursday, 10 o'clock. And if you want to call in, we have an open phone, 214-377-1108, 214-377-1108. You want to send an email, which we can then address that to whoever you want to address on the podcast here. It's a podcast at compoundstockearnings.com, podcast at compoundstockearnings.com. And Randy should probably be showing up a little later here. But anyhow, we have Cezanne, and we have Joni with the hat on. I like that hat. Have Dirk, CEO. Have Keith up there in snow country. Is it snow up there today, Keith? Still got snow?
Just a little bit in the shade. It's been too warm. Most of it's melted by now. Just a few piles here and there.
And, of course, I'm down here in Fort Worth, and we actually have sun right now. It's going to get up to about 75 and no rain. So it's looking good. Got several things, some interesting stuff here. I usually give a lecture on corruption in the equities business, but I'm not going to talk about that today. What I'm going to talk about today is some interesting stuff, really interesting stuff. First, just a couple of things on why it's important to be able to do your own management, is particularly when it comes to retirement. And we know, because I keep harping on this, practically every state, practically every big company is having problems being able to fulfill their obligations on these retirement obligations. And it was an interesting article. I'm just going to read the title of it today. Board orders pension cuts in Puerto Rico. Now, they've been holding out on these pension cuts forever, but this is an example. It's just because you have a pension with a state or a government doesn't mean that you can't be subject to pension cuts when things get really tough. The other one, and I can't believe this, but there's a solution. Judge orders embargo of Puerto Rican Catholic Church accounts, and these are just the pension accounts. And, of course, the solution here is they just have to pray more. And it's a Catholic church, it should work out okay. Now, this is real interesting. Oh, I want to report this. Joni and Cezanne's good client up in Chicago, John J., sent an email today. And it's a lengthy email. He sends an email once a week of all his trades. And his one last week, it had a few losses, but not overall. He was in pretty good shape. This one, I'm just going to read his returns. And it'll be in the Cal report this weekend. And I don't know if Cezanne and Joni got it. But he had 8 trades this past week. 7 on positive and 1 rather mild loss. But the net income was 125.15%. Average net return for 8 trades, 15.64 cents each. And really, really an interesting email. The whole thing will be in the Cal report under the client emails. Now, this is interesting, and it's so direct what we talk about. I don't know, any of you guys ever heard of behavioral finance? Cezanne, Joni, Keith, anybody?
Is that where you sell low and buy high?
Wait, I got to get cut to the chase here. Behavioral, I'm just going to read this here. It's an article I picked up yesterday, and it's going to be focused in the Cal report this weekend. But yeah, behavioral finance is the study of how economics and psychology intersect. It helps us recognize the natural biases that lead to making illogical and irrational decisions when it comes to investments. Now, the beautiful thing about CSE is that if you follow the CSE rules, and we've talked about this forever, you just follow the rules. You're not going to have any of these things. For instance, there's 4 different things under this behavioral science. One is hot hand fallacy. Number 2 is regret aversion. Number 3 is confirmation bias. And number 4 is hindsight bias. I'm going to read one of them and tell you the answer that you'll see in the Cal report. The other 3 I'm not going to go into because they're longer, but I address them specifically in every aspect of the CSE technique completely, applies to every one of these. This first one, watch out for hot hand fallacy. I thought this was appropriate that I would address this on Cezanne and Joni's technique. Hot hand fallacy. This is the notion that because one has had a string of success, he or she is more likely to have continued success. That's the fallacy right there. For example, one study found that casino gamblers bet more after winning because they believed that their chance of winning again was greater than before. In Cezanne and Joni's macro moment trading, and they've been doing this for years now, several years, we say you can't do more than one trade a day. Why one trade a day? Because when they do a trade, they're studying those ice charts and those advanced charting, and it's intense stuff for maybe a few minutes, and then the trade maybe lasts a few seconds. Very seldom do they have a loss. Very seldom. And if you look at if they just average 3% a week average, and they do much better than that. Some weeks nothing, but some weeks a lot more than that. That's 150% a year. But you have to think about those things, and you have to follow them. You hear them talking when they're talking, and it's they're going kind of fast. And when you attend their seminars on Monday, Wednesday, and the long one on Thursday, you get all of what they're thinking. And once you do a trade and it's successful, you're kind of tired. So we say just quit right there. And that's exactly what that number one rule that they're talking about, or fallacy, is watch out for hot hand fallacy. And the other three I address, and each one of them with a very specific CSE technique in the Cal report this weekend. So it's really, really an interesting study. And it's interesting also, if you think about it, each one of those things, if you want to see where it's totally violated, go to CNBC, watch Mad Money with that crazy Kramer. He violates every single thing there. And that's probably why most of those idiots that call in that say stupid stuff probably are very, very, very big losers in the financial market. I'm sure they probably are.
Hey, Joe, so what you're saying with that hot hand fallacy is that if you get a trade in and it's good, you're done for the day. Why push your luck? Because you may win one more trade, you may win two more trades, but eventually you're going to have a loss, and it could wipe out all those trades for that day and then some.
Yeah, because they'll have a trade, it may be 2%, it may be sometimes as high as 9%. So why push it? If you just did 2% and you did one just once a week, that's over 100% for the number of trading days that there are in the course of a year. So why would you push it? And why would you? This is so opposite of what we used to talk about. Dirk, you've been around here long enough to know. We used to talk about when we just had the third Friday expirations.
Right.
You actually began to drink too much and became a dope addict after you bought your stock and sold your call, waiting for the third Friday. Now this is the total opposite. This is the total opposite, where things are done, within seconds of the market, within minutes of the market open up, and then transactions only lasting a few seconds. And but you're right. You just do one and forget about it. I mean, if you can't take 100% or more, then something's wrong with you.
Yeah, I used to work in the gaming industry, and we'd have all these hold percentages that we did on the back end books. Whenever you're calculating how you're going to run the floor of the casino, and some of those slot machines pay out 99% of the money they take in. That sounds like a great deal. But it means they keep 1%. And if you stay there long enough, 1 + 1 + 1 is 100%.
Absolutely.
You got to think of the market kind of like as the house, and the house will always win. Once you've gotten ahead, it's a good thing to walk away and wait to gamble another day.
Yep.
So the same thing is true with trading. Once you've made your money, sit back, wait, and do it again. Don't stay there until you get sucked in, because another thing people will do that lead to the same thing, Joe, is chasing a loss. So they make money on trade one, they lose money on trade two, and then they got to get back the money that they lost on trade one, and they end up losing more money. So you got to be careful of that.
Yeah, and there's another one in here, Dirk. Let me find it. Well, it's one of the four. I don't think it's regret aversion. It's the one where you have a loss and you get so psychs you out, you don't do anything. You sell for a loss. And I don't know which one it is. I don't want to go into it right now. I need to read this off an iPad. But our friend Ben, everybody knows Ben here, I think. And remember, and they specifically relate this fallacy to the big 2008 loss, right? Mm-hmm. where so many people panicked and sold their assets for a loss. And had they done nothing, everything came back, even came back higher. And that's one of these. I don't know which one this is, but and a prime example is Ben. Remember, Ben's dad didn't even open. He got so depressed he wouldn't even open the envelopes of the brokerage company that was sending him his statements because he didn't want to see the losses. So he did nothing. He did absolutely nothing. These things just packed up. In the meantime, Ben was kind of just starting with us, and he got to know the technique. And he asked his dad if he could look at that stuff and see if he could maybe resurrect some of it. And he did. He got him back to full value over time.
Actually.
Exactly. Yeah. So that's exactly the benefit of the CSE techniques, that you have that ability. You don't have to just sit there, so you don't run out and panic and lose money, because if you've used our toolbox selector, you've got good stocks. They're going to stay in business. They're all going to go up and down. And if they go down, you know how to make money on while they're going down. Even if you don't do that, if you just sit there and let the whole thing calm down, and they start back up and you start back doing your calls again. So it's really a really appropriate theory. So it'll be in the Cal report this weekend. That's all the exciting news that I have. So we'll talk. Cezanne and Joni, why don't you give me your thoughts on that hot hand fallacy?
I just think it's interesting how you find all these things.
There you go.
So it takes us a minute to unmute. So that's why that's why we're not answering right on top of it. But yeah, it's makes sense. So you've always taught not to overtrade or, just be happy, turn off your computer and move on. So that is part of what, a big part of what CSE teaches.
Well, listen to y'all seminars. Y'all are agonizing so much, and Joni, y'all are griping. Oh my God! Oh no! Well, just forget that. No, not good. And by the time a few minutes go by, you just don't recognize that you're sort of like an athlete. A runner. You don't realize that you're about to die of a heart attack. Right before you cross the line, and that's how y'all always sound. You go through these extreme in emotions, and that's exactly what they're talking about there. So you make one trade, hey, forget it. Like Dirk said, take that one trade. Again, if you only get 1%, you got netted 1% a week. That's over 50%. Just 1% a week.
Mm-hmm.
So, what do you think, Joni?
Absolutely. There are many times during the week that we don't even have a trade because we work with probabilities and we're super conservative in our approach. So if a trade does not develop, we just sit out. And the same sort of mindset that you have is we're certainly happy with 1% a week. We're happy with 1% every 2 weeks. And so
y'all set it out and you explain similar exactly why you're setting it out. And the next week, both of you may do 1 or 2 trades each. Cezanne, you may get 8 or 9 or 7%. Cezanne may get 7 or 8 or 9%. And so average out, you're still making way over probably 2 or 3% a week when you average everything out over all the trading days. So it's just huge. Keith up there never has these problems because his C-Max and C-Charlies or whatever the hell he calls all those things, they just, kind of slow, sleepy things, right? Do you have any of those apprehensions with behavioral finance theory?
Yeah. I mean, particularly this first 3 months of the year, I was just hearing yesterday on the radio going home that we've had more huge swings in the market in the first 3 months of this year than we've had in all of 2017 total. And it's just crazy. And the Cezanne and Joni on their quick trades in and out, boy, those are just really good for right now. And so anyway, do have some of those occasionally. Got into CMIC on Monday that really looked good this week. And then what happened on Tuesday or Monday afternoon, it went straight up in the air. So as I'm just really trying to be disciplined and follow the rules. And I said, now let me get out of the call side. This thing can rise straight up. Don't want to do that. And well, okay, it dropped like a rock the next day, but boy, the charts didn't indicate that, and trying to be safe and get out right. So anyway, so that's this week, and the put side, it's just going to expire worthless today, so I don't want to have to pay to close that one out. So
now be careful when you say on this podcast it's going to expire worthless. A lot of people don't understand that's good.
That's a good thing for absolutely for the credit spreads. We want them to expire worthless because you get a credit when you open, and if you're going to close them, you have to pay to close them. Yeah. So if you can get to expire worthless, that's a great thing. Yeah, you're right, Joe, because maybe people will see that my comments in the Cow Report say, yeah, I'm hoping for it to expire worthless.
Absolutely.
Are you smoking something? No, that's a good thing for credit spreads. Absolutely.
Well, you have to remember, expiring worthless is synonymous with the phrase cheap date. I mean, a cheap date can be lots of fun, So, it's kind of the same thing.
Okay, I've never thought in that terms before, Joe.
I want to read one more.
Never will again.
I want to read one more thing. It relates to John up in Chicago, and what he said here at the bottom of his email is that I generally trade in moderately large lots, parentheses for me. So this was enough income to meet my budget for the month, just from trading within an account about the size of the SEC minimum to start with the previous week. I can say that if this keeps up, it will be very tempting to take over the professionally managed funds from my retirement account managers, as they don't usually make this much in a quarter, much less in a month. Of course, this does not mean I will be increasing the trading or amounts. Let's see what it's on the second page considerably, but why pay them to do less with so much more? This has always been my goal anyway, from the beginning with CSE. Thanks for the continuing webinars and education. I'm looking forward to the all-day webinar next month. So it's interesting, That'll be in the Cow Report. So Marcus, anything new innovations coming up? Marcus and I have this running battle on these self-driving cars.
Yes, we do.
And he's a futurist, and he thinks they're really going to be here. Probably next.
Yep. Exactly. They're coming. It's 10, 20 years. It's going to take a while to integrate, but it's already done. I mean, they're already on the road. You're just not aware of them.
Well, I'm never going to be in one because I get car sick. There's got to be enough people like myself that are going to get car sick in those things.
All right. Didn't you show you shared a story about some technology that would prevent car sickness?
Well, that's right. Yeah, those glasses you wear, and they're not strength glasses. They look like regular glasses, and you wear them, and they solve the car sick problem.
Right. Exactly.
Yeah. Huh.
Hey, Marcus, is it true that you're trying to change your name to George Jetson?
I won't be. I don't think I'm going to be alive long enough to really be a George Jetson. I think I'm going to miss it by a decade or two. But here in Dallas, I don't know. I guess Uber is still going forward with their flying taxi here, right? We're going to be one of their test markets where they have flying taxis. So you hop in, it hovers you over to some distance elsewhere, and then an Uber driver picks you up from there. And so that's still coming.
Yeah, one of the test locations was in Florida, and Florida has jerked that away from them. They said,
oh yeah.
Yeah. Well, after this car accident where they innocently killed that woman on the bicycle. They jerked it away. So, and Arizona says they can't use their cars out there anymore, test the cars anymore either. So it's been a major setback this week for you, Marcus.
Just a temporary. What's the saying that we always tend to overestimate the impact of technologies in the next 2 years and underestimate it in the next 10 years.
That's probably right. So, okay. Dirk, anything new coming up with you?
No, not right now. I just want to wish everybody a happy Easter, though. We're coming up. Tomorrow is Good Friday, and hope everyone has a joyful Easter weekend.
Absolutely. And when are you going back down to Puerto Rico?
I don't know, Joe. Probably in April.
I've had this terrible, and you've seen me since you've been back in Puerto Rico, and I don't know if it's some kind of disease that's turning me into an albino or what. But I'm going up to this weekend for Easter to visit Cezanne and the grandkids. And I just fear when they see me, all they're probably going to see is a walking hat. It's just a hat, I have turned so white, And
time for you to get back down to Puerto Rico then.
I know it well because we would always, both of us always down there off and on all the time.
Mm-hmm.
And Marcus, you wouldn't believe, you wouldn't believe. Marcus,
believe what?
How white he is. How white Joe's gotten.
How white I've gotten. Yeah.
I can see.
Yeah. People come up to me and say, "Boy, you sure are, paling out." I said, well, yeah, Yeah, so I was sitting here, Pat was in Europe, and I'm sitting here in this house all day, and I forgot that I had all the blinds drawn. And she came back and said, why you got all the blinds drawn? I said, doggone it, that's it. That's why I'm turning white. Turning whiter, turning into an albino. So, okay, well, with that great financial news and projections, we'll call it a day. Appreciate everybody being here. And you can listen to this podcast 15, 20 minutes on YouTube, and along with all our other podcasts that we've already done. And if you have any comments or anything, email that podcast at compoundstockearnings.com, and we'll get it, and we will immediately answer your email, and then we will address it on next Thursday's podcast. Go to our website, compoundstockearnings.com. Sign up for the Cow Report, absolutely free. It's been published for 20 years now. And also in that Cow Report, you'll see all kinds of questions from all our clients and what their returns are and what they're not having, good luck with, and how our folks address those and keep them all going straight. So compoundstockearnings.com. You can also review all the seminars that Joni and Cezanne do, and that Randy does, and that Keith does, and their times and what they cost, and all kinds of stuff. So you just go to compoundstockearnings.com. That's our website, and take a look around and sign up for the Cow Report. Okay, folks, if nobody has anything else, we'll call it a day. Thanks a lot.
Have a blessed Easter, everybody.
Bye. Thank you.
Bye.